Imagine this. A CEO stands before 20,000 furious employees, all of them worried about their future, while the company's stock is plummeting. It's a financial nightmare no one saw coming. What happens next? Well, that's exactly what we're diving into today. Volkswagen Group has just hit a major setback. Their stock price, which was once soaring at $242, has now dropped to a staggering $85. That's a 36% decline in 2024 alone. Can you imagine the pressure? The company's future looks uncertain, and it's sending shockwaves through the financial world. And this doesn't end there. Major brokerage houses have really started making recommendations that require the investors to divest from their stock portfolio. They claim that Volkswagen's poor performance shall continue unless something really important happens. Investors are jumping ship, and the company is up against a real battle facing up to the uphill task of turning the ship around. It gets worse. In front of 20,000 employees at a recent town hall assembly, the CEO, Oliver Blume, confronted a very angry crowd. The workers are upset, and rightly so. With fading factories, huge debts, and a possible deduction in salary, they feel that their future is at risk. Once a pioneering company, now it struggles to keep its employees happy as those demand reasons from it. Emerging troubles get thickened in the pockets of Volkswagen. It has reported sagging earnings, which are accompanied by major joint losses, dropping stock prices, and the ever-increasing debt burden, which is more than $30 billion. How such situations can be remedied keeps scrambling the company with solutions. And while several structural changes have been adopted, the damage has been visible. Investors get jitters, and now it is a race against time for CEO Oliver Blume. On the other hand, these heavy investments in China, one of the strongest economies where Volkswagen is operating, are not giving returns lately. The slowdown in the growth of the Chinese market leaves Volkswagen with no option but between a rock and a hard place. They had estimated that most of their sharing would boost sales through the launch of a new model and electric vehicles. However, the competition is so rife that margins shrink as they set out to improve market share. And then you have the union response to workers, most of whom have spent decades in the company and are now feeling tired. This has reduced stock prices and squeezed wages, which has made job security hang by a thread, all of which are getting the unions fighting even more. Protests and strikes are mounting, and the unions say they want better conditions to work under and stronger accountability from the management. Anger is visible as employees push back against what they say is poor management and a lack of transparency from the top. Even then, with all the financial troubles, Volkswagen still believes in its electric vehicle, EV ambitions. The continuing commitment is seen in the pledge for huge investments in turning into an EV leader. Thus are its plans to roll out new electric models in production, with some hype around ramping up a factory for batteries, if to say, here, the fact is. Still, it has turned out to be far from the rosy outcome they expected. Speaking on behalf of the following miserable affair will be Volkswagen's chief financial officer, who is in the eye of the storm regarding the company's finances. During an earnings call, he confirmed that though the company attaches some confidence to the long-term future of EVs, this type of short-term challenge is unavoidable. The CFO even cited the increase in manufacturing and the logistical problems, talking about the financial consequences in place for the company with this transition to EVs. Analysts were unimpressed by these comments, expecting a more positive outlook. As it appears, the road ahead is set to be much bumpier than earlier anticipated by Volkswagen. With all this tension in the air, Volkswagen employees are getting louder. Strikes now form the reality of the company, with unions not only demanding fair salaries, but also demanding job security due to the changes in the automotive industry. Fear is looming that jobs will either be replaced or cut out as Volkswagen goes ahead and changes to electric vehicles. The unions want transparency in salary packages, fair wages, and guarantees that no worker will be left behind when the company makes its next move. It's a very serious showdown between workers standing their ground and refusing to budge. Volkswagen finds itself in a market positioning crisis. In the past, being a great powerhouse of the automobile industry, its stronghold on the market was fast failing. Its stock prices have been dwindling alarmingly for the past couple of years, and recent reports have shown that it has started to lose out to several other rivals. Tesla and BYD are two prime examples of companies that are continuously growing like the wind in the EV segment, leaving Volkswagen lagging in the dust. Volkswagen's troubles aren't happening in a vacuum. Currently, it is no different for Volkswagen, as all other auto manufacturers in Europe find themselves in a crisis. European manufacturers are suffering heavily because of the transition to electric vehicles, as cost and supply chain increases have added to the pressure of compliance with stricter environmental regulations. Besides this, global economic uncertainties continue, leading to hardship for the European auto industry. The large European automaker currently, Volkswagen, faces more challenges in the above light. There is a likelihood of layoffs and restructurings because the crisis is not only taking away from profits for the company, but also from its workforce. The whole industry is at a break in the tide, and so is Volkswagen's downfall. Volkswagen is now under strict restructuring measures, where it must make tough, unpalatable decisions, like closing plants and laying off workers to weather the financial storm. The company has also had general closures on some plants to ensure production streamlining and cost-cutting measures that have sparked protests from employees. Thousands of other workers, too, are under serious threat of job losses in the consolidation process. Though seen as a buoying factor for Volkswagen's survival, the factory closures will, however, devastate many workers. Layoffs and closures are adding more straw to the ongoing strikes and protests for better protection and treatment during this uncertain period. Volkswagen's troubles are rippling through the German labor market and the broader economy. With layoffs and factory closures on the horizon, the company's actions are threatening thousands of jobs, creating anxiety for workers and families. Germany's auto industry, a cornerstone of its economy, is facing significant disruption. As Volkswagen is one of the largest employers in the sector, the economic impact of this crisis extends beyond Volkswagen itself, potentially affecting the entire region's manufacturing base and tax revenues. This situation could lead to rising unemployment, increased social tension, and slower economic growth in Germany, particularly as the country shifts to a more sustainable green economy. Volkswagen's future is increasingly at risk due to fierce competition from China, the world's largest EV market. Chinese automakers, such as BYD, are rapidly gaining ground in the global electric vehicle space, producing cheaper, innovative cars that appeal to a broad customer base. Volkswagen is struggling to match this level of competitiveness, especially as China strengthens its hold on EV technology. The future outlook for Volkswagen hinges on its ability to adapt quickly and navigate these challenges while keeping up with global trends. Strikes and riots show the declining relationship between leaders and workers. Labor relations are now deteriorating, and employee grievances have reached their peak, boiling over from cries of layoffs to slopped wages and switching priorities of the company. The rising worker discontent is going to fuel protests and strikes and build more hurdles in stabilizing and recovering Volkswagen from its present quagmire. By focusing on improving the development and production of an innovative electric vehicle, Tesla is indeed going to top whatever Volkswagen plans to do. The fast-changing nature of competitive EV environments creates share price pressure on ordinary manufacturers like Volkswagen, all courtesy of Tesla's advancement in its EV technologies, combined with an aggressive pricing strategy. Furthermore, while it can scale production at low cost, it represents the gold standard for all EVs, making competition tougher. Therefore, it must counter that and invest more in developing EVs, while innovation is indeed the focus now. Volkswagen is confronting several strategic challenges while it seeks to come out of the present crisis. Even though they poured their investments into electric vehicles and China, results have not come their way yet. This leaves them in a somewhat vulnerable state. On the other hand, Today's markets in the world auto scene are changing rapidly against the backdrop of sustainability and low emissions. Fast changing along these lines are demands from Volkswagen. Production problems need to be addressed, operations streamlined, and trust restored to workers and consumers alike before the company can hope to reclaim its significant place among other industry players. As Volkswagen navigates this crisis, it's clear that tough times are ahead. With financial challenges, a shift to electric vehicles, and rising employee discontent, the road to recovery won't be easy. Can the company turn things around, or will it continue to lose ground to competitors like Tesla? Only time will tell. Let us know what you think about Volkswagen's future in the comments, and don't forget to like and subscribe for more updates on this evolving story. Thanks for watching.